Ladies and gentlemen of the crypto space, we're live on a Wednesday, March 2nd at 11:49 a.m. And today is story day. And it's clearly not bandwidth day, but that's another story. The stream will do the best it can. But what are we talking about? We're talking about understanding this space for what it is. New folks come into this space and they see prices and then they see an asset and they buy an asset and they hope to sell it for more money than they bought it for. But there's so much more. There's so much depth and richness to what's going on, and so many processes and relationships and partnerships. And what I have begun to call all of that is federation. And what is the history of federation? It's the relationship between countries, and that is historically is manifested with regard to trade deals for the exchange of goods and services, but also the exchange of currencies. And that's exactly what's occurring in the crypto space. I don't care whether a sovereign wants to call something a currency or not. A currency is something that is overwhelmingly applicable to these assets that we use in the crypto space. Now, I use the word asset rather than a currency because I find it boxes it in too much just to call it a currency. And in many regards, it's also boxing it in too much to call these things assets because they have multi-faced properties of assets, of commodities, of currencies. It's downright fascinating, and that's the story we've been telling for over 2 years at this point. So, trade deals and the relationship between sovereign nations is really what I'm honing in on to attempt to iterate on the way I could explain the behavior of these protocols and these assets. Let's pop it over to the main screen and we'll look at the original federation, which is Curve. Curve, maybe we could always go back and say, did they know what was going to come from their protocol? And back at the beginning of 2020, I don't think they knew. I think they had some. Obviously, they were hoping, they were innovative compared to everything that came before them. There was nothing that came before them, but the introduction of convex really changed everything for Curve and created the necessary deflationary pressure in order for the monetary policy to stabilize and really halt the hyperinflationary depreciative decay. And that's so evident in this chart. Notice how I'm looking at the monthly. I'm not looking at the daily or the sub daily. You got to zoom out to get some perspective here, boys and girls. Now, I don't hold the position in CVX CRV anymore. I have a legacy, old school VECRV position, but the foundation, almost 50% of my portfolio is tied to the curve narrative. So, isn't that fascinating? I've talked in previous streams about not overexposing to a particular narrative. So if you have like three assets that are hitting the same narrative, you're overexposed to the narrative. In this instance, curve is the root of the narrative, and there's plenty of reasons why it's a great asset and it's expected to appreciate, particularly because of federation and mandated acquisition. This really is where I've been thinking of federation, and that's why I mentioned like Dodd-Frank this morning. There's reserve requirements for protocols to just purchase Curve. They're obligated by design to purchase Curve. It's just an accumulation process, and that's fascinating. So clearly, it's in a hyperinflationary supply. And even with the mandates, you have the capacity for depreciation, which is exactly what we see in the chart here. And this reminds me exactly of a sovereign bond market. So Dodd-Frank says the certain reserves are required at all times, ignoring the denomination at this point. But for this example, but let's say organizations are mandated to purchase bonds, which is the case. And that's exactly why there's a constant buy pressure on U.S. government bonds. That's the same thing with Curve. There's a constant buy pressure on Curve from the market because of mandated protocol designs. And that's fascinating. And you still have the depreciation. It's hyperinflationary. So it's exactly what the bond market is. They're always printing more and more bonds, issuing more and more bonds, increasing circulating supply. But the mandated organizations are consuming them from the market. And And that's the same thing that happens with Curve. So it's clearly not the same. We're talking about sovereign bonds. We're talking about a software DeFi protocol. But that's what's occurring. The same exact phenomena. There's a mandated purchasing of these assets independent of market conditions. And that's what you see in the chart here. It's such a overall bullish trend, and that has no short-term implications. When I say that, there's no reason you can't have a full-on ABC correction down to $1. That doesn't mean jack shit with regards to this narrative. If it drops to $1, it's still a bullish trend. That's a higher low, and you can imagine the macroeconomic landscape required for that kind of depreciation. There'd be a lot of selling to drop this asset down that price. This is a highly liquid asset. There's an immense market cap. Be a massive amount of selling. And I don't think it would necessarily go there, barring a very large scale macroeconomic event, which we're in the situation where that is quite possibly to occur. And that's how you manage your portfolio, risk, so on and so forth. You got to manage your risk. It's all about risk management in almost all regards. Um, I was going to say a point that so there's a whole narrative here, and it's a federation of protocols that are consuming Curve. So the Curve narrative is very evolved, and obviously convex has dominated, and now there's protocols trying to focus on the convex narrative because it dominates Curve supply. And that's just an evolved narrative compared to where it started from. So you could have many assets that are entirely exposed to the Curve narrative that will exhibit behavior, price action, and interest from the general public, because it's all tied to the Curve narrative, where there's this currency, this forex currency that is being emitted and creating velocity and creating capital flow. And as you can see in the chart here, there's more inflow than outflow over time. And that's the whole trade deal notion. A Curve incentivizes capital inflow into the system, not only for its currency, but also for currencies that are provided to LP positions that Curve's Forex currency is used to incentivize. Um, and that creates a deflationary pressure for those respective currencies as well, which is quite fascinating. Um, it's all about inflation versus deflation, balancing those pressures, and also balancing capital inflow and capital outflow. So what do you have here? You have all the hallmarks of government policy and good trade deals and good monetary policy. Monetary policy that balances inflationary and deflationary forces, and trade deals that balances capital inflow versus outflow. The most successful countries have a balanced trade deal. The most successful countries have a stable monetary policy where you don't have excessive growth of circulating supply. And it's more complicated than that in traditional finance, but generally speaking, an increase in circulating supply decreases the relative purchasing power. In theory, if you increase the quantity of dollars in circulation, there's increasing likelihood that they could be sold for other currencies, so that the other currencies become stronger relatively. This is there's those other currencies are chasing more liquid, more available dollars. So that's the way this whole system reduces, in my mind, those two very interesting balancing acts between inflation and deflation and capital inflow versus capital outflow. So what have we seen with Curve? We've seen that Curve has a capacity to drive capital into the system. It's an incentives, and that's a strong psychological pressure to draw more and more capital into the system, whether it's for the LP positions, for deep liquidity, and the deflationary pressure for the LP assets, or literally just for the Curve Forex currency itself. It's just an extraordinary dynamic, which means as more and more capital is drawn into the system, people are able to take capital out of the system in the form of profits. And that's literally an economy. That's an economy. The cash is flowing. There's velocity, there's growth and expansion of currency. There's more currency units, so there's that inflation, which is needed for a growing economy. And people can take profits, but the capital is coming back in because it is a profit machine. Oh my God, we're literally looking at digital economies in so many regards. There's no argument in my mind that we're looking at monetary policy and trade deals and systems that produce profit and are balanced and not destructive to their economy. They're growing because the incentive systems continuously drive capital inflow. So fascinating. And that comes to, I guess, solidly because that's like the second over the last 2 years of a policy that is pretty much closely aligned to what Curve started. And folks could have their opinions about what's occurring and be defensive that, oh, curve, I'm going to stick to my curve. It has nothing to do with I'm going to stick to my curve. I'm exposed to the damn curve narrative. I don't have CVXCRV because, frankly, I think there's opportunity cost. I expect CVXCRV to appreciate, the CRV to appreciate as we see in this chart. I don't expect it to asymmetrically appreciate because of the hyperinflationary emissions. I expect it to appreciate. There's no reason it can't at least get back to where it started in a year, $23, or get back to where it was at $6, $7, $8, $9, $10. But I don't see this as a currency that's going to asymmetrically appreciate. I may be wrong. I'm probably right. I'm usually right about most of these narratives that I try and tell. And I think things are slightly different with what Solidly is creating for a variety of reasons. Let's talk about that. First and foremost, look at this hyperinflationary decay when the protocol launched. Draw. So that's protocol launch, hyperinflationary decay. This is kind of an outlier because there was no convex at the time and it was clearly just farm and dump. What's fascinating is that if you look at solid, this doesn't count. This was bootstrapping. This is initial token supply in the market. This is a massive buy. But the fact that it's up and basically horizontal, um, I find it fascinating that it held support right there. Let's see how far this goes up or if we have a new lower low. But the fact that it's basically trending horizontal, I know people in traditional finance would say $17 to $7 isn't horizontal. But this is basically horizontal from 50 cents to $15 at $7. It's almost right at the midway point. It's downright fascinating. There's a huge emission schedule. It's large. There's so much capital being printed out of nothingness. We see what that did to Curve. Hyperinflationary, hyperinflation-induced depreciation. The fact that it's not occurring here is what's most interesting to me. I don't give a shit about appreciation. I care that it's not depreciating uh, in a cascading decay. Um, and that's because it launched with properties of convex. It launched with a secondary protocol that is a convex. There's another protocol that's coming online that's another convex, and I believe there's one other or two others or so, give or take. Is it radial and is it E Dow and 0x Dow? So there's three, and there should be four because it's solid X. So that's four secondary curve convex protocols, in addition to solidly itself being a convex protocol. I find that I'm tickled pink by that notion. So I'm not. I don't hesitate to have interest in this chart and this asset merely because it's not appreciating. I'm absolutely fascinated that it's not depreciating. It's not going down in value. And that's because of these secondary protocol characteristics that suck supply out of the market, remove it from circulating supply. And we'll see where it heads. The narrative is unfolding as we speak. It takes time. And I find it quite fascinating. It's not curve. It doesn't matter that it's not curve, and it's not about competition. It's about opportunity. It's about proper portfolio construction, proper position sizing, proper risk management, and speculation. So I speculate that this asset has characteristics of the curve convex relationship and the curve federation of protocols, with differences because this is not a hyperinflationary asset. In fact, this is a disinflationary asset. Now, in all honesty, Curve technically is also a disinflationary asset that's hyperinflating because hyperinflating with regard to the quantity of emissions. They're massive. And over the years, there will be less and less emissions. The thing about V33 is that it's disinflationary over short periods of time. So what I speculate is that we'll still see high yields on LP positions, but it won't be because of quantity of assets. You'll notice that with Curve, the price action is relatively stable because the hyperinflation does that. So you have the balance between inflation and deflation, which prevents the hyperinflationary depreciation, but it also is preventing asymmetric appreciation. So, in my opinion, the protocol dynamics, the protocol properties could very well manifest in an asymmetrically appreciating solid price. The emissions are coming down and down, and the bribes haven't even kicked in yet. They're just not there. And there's 3 additional convex protocols coming online. We could easily see the bribes really tick up the demand for solid to gain access to the revenue that the bribes will provide. And the reason the bribes will be there is because it's the most capital efficient way to drive liquidity for all the protocols that have LPs on solidly. That's exactly how it works. They want to create deep liquidity. They want the deflationary pressure on their token. You want to see what happens? You want to see what bribes, well, not, it's not really bribes, but the solid emissions do for assets? Look at Iron Bank. This is a heck of a chart thus far, and you can see it even better on the spooky chart. Yeah, all my drawing. It's a whole lot of drawing. So we had this complete farm and dump, cup and handle that was invalidated with a complete V-shaped recovery to literally result in a double top, which has characteristics of an inverse head and shoulders. Holy shnikes, this is a heck of a chart. Wow, look at this. Look at that. Wow, wow, wow. This is fascinating. That's a heck of a chart. And it's sitting at right on resistance right now. Literally got rejected at resistance. You can't make this shit up. And that is obviously because of the incentives. There's over 1,000% returns at the expense of solid. And it's such a dynamic relationship between the price action of these protocols, the emissions rates, which generate basically capital flow. And look at this, 947% on Iron Bank WFTM, drawing in $21 million worth of liquidity, sucking that out of circulating supply, which means there's protocol alignment. The persons that provided liquidity aren't liquidating Iron Bank, and that means there's less Iron Bank to be liquidated, which means there's also less Iron Bank to be bought. And that's why this price action looks like it does. And you can see the same exact thing in beats. 34 million liquid. No, that's beats, F beats. So there's a lot of liquidity on Beethoven, which is actually good to see. Beethoven is a heck of a protocol, by the way. Not just the asset, but the protocol. The routing, the trade routing, the swap routing is very good. So you can see it right here. I mean, look, this is when the bribe system got introduced directly to Beats. So Beats itself has a bribe system, has gauge weight and voting and emissions. And this is when it was released. It was a completely different asset after it's released. And this was almost 2 months. Well, a month, November. Yeah, almost 2 months. Then they released the bribes, and bam, it's up to the upside ever since. And obviously, there's the additional revenue. There's 541%. This was like 4,000%, drawing in $27 million worth of liquidity pulled out of circulating supply. That's massive stuff. Absolutely massive stuff. The effect that a forex currency has on assets in an ecosystem merely because they're part of a federation. What an extraordinary way things are playing out. Now, if you go over to solidly, the only meaningful bribes thus far are two. I'm quite interested to see how all of this plays out. Obviously, it's extremely capital efficient for these protocols, all these protocols, to spend $1 million a week, $2 million. I mean, Frax is spending $6-7 million a week, and they're dominating the curve wars. So the more bribes that they're able, more capex they could lay out in order to adjust the gauge votes to incentivize their LP position, the deeper the liquidity they'll have for their LP position, which means the less circulating supply, the more deflationary pressure, and ultimately the more likelihood of price appreciation for their respective asset. If anyone understands that, it's curve at this point. It's going to be quite interesting to see what kind of bribes they throw around. They got a heck of a treasury at this point, a lot of capex to deploy. Very interesting. So the rewards work. It's very nice. They're not as lucrative as the incentivized rewards on the DAOs, but they come in 600. It was like 4 or 5 grand worth of Fantom, give or take. It's good to see. I look forward to the other bribes. I don't expect them to decrease. I expect them literally to just go through the roof. And that's going to drive significant demand for solid. Because individuals, look what happened with convex. Individuals buy convex and they lock it because they want access to the bribes. It's the same exact dynamic. Is it not the same exact dynamic? Am I taking crazy pills? If we have a complete playbook of what happens with a curve convex relationship, and in this instance we have 4 convexes, and the protocol itself has a convex, so there's 5 convexes with bribe systems. Holy crap! To top it all off, it's not a hyperinflationary emission schedule. It's disinflationary, strongly disinflationary. So we can see a very scarce, solid circulating supply that folks are chasing after in order to gain access to millions of dollars of bribes on a weekly basis. Wow. So I'm quite tickled pink. I find the DAOs to be red herrings. Now, obviously, if you're throwing around like $1,000, you're not going to own much of the gauge vote to get bribes. So in that instance, you might find it more beneficial to have the leverage associated with the secondary DAO. And I guess that ultimately is the entire point of the secondary DAOs, to crowdsource voting power and really disseminate or disintermediate the emissions of the bribes. And that's big and that's cool. I personally don't. I don't want that. I want the root. Like I've always talked about curve, and I've always talked about convex versus like a redacted or other protocols that are sucking it out of circulation. Instead of looking at the DAO, I look for the asset that is being accumulated. So in that instance, it was convex, thus my large convex position. And Frax, the reason for the Frax position is that it's part of the curve narrative, but also Frax is unto itself because of its stablecoin narrative and FPI. So that's how I justify having those two positions that are so tightly coupled to the curve ecosystem. So I'm over allocated to the curve narrative. But the allocations to the curve narrative are so multidimensional that the curve narrative is only a part of their offerings. So that's how I rationalize those positions and maintain consistent with the notion that I talk about, where you don't want to be overexposed to any one particular narrative. Let me answer some questions. Let me help you guys out. 56 people in the stream, 20 likes. We appreciate all of you guys. Darren's in the house. Norris in the house. Can you please give thoughts on Fantom? So Fantom, this is going to run Fantom. This is exactly what happened on Ethereum. Curve owns Ethereum. They started Ethereum. They're literally such a critical piece of infrastructure on Ethereum. Um, and I think this is going to light a fire on the Fantom ecosystem. And it's just getting started. This is less than a week in the wild. Um, they're very sustainable because this is a forex market, and this forex currency drives capital flow. It sucks liquidity out of circulating supply, albeit there's deep liquidity, so transactions are liquid, which is big. And the richness and robustness of the Fantom ecosystem at this point is probably going to be driven by this brand new protocol that's about 5 days old. Beethoven X has some really awesome routes. There's a bunch of aggregators that are coming online, AMM aggregators, which will facilitate ease of interaction with the Fantom network. I see the strongest infrastructure becoming available on Fantom, at least the second strongest infrastructure as compared to mainnet Ethereum. And there's so many damn protocols coming online, but it really requires the basics, the base infrastructure. And I've talked about this over the years. Like you need the AMMs, you need the money markets, you need the debt markets, you need the banks to offer lending, so you have velocity and you have currency expansion. Um, but man, what Curve and Convex showed is such a synergy between monetary policy and trade balance that I think if my analogies are correct, which they're very rational, barring some catastrophic event, what's emerging here is superior to the curve convex relationship speculatively. But that's irrelevant. That doesn't mean anything with regard to the moat that Curve has, which is exactly why I have almost 50% of the portfolio exposed to it. So folks could say all they want, oh, only Curve. Yeah, I'm exposed to the damn Curve ecosystem. Okay. But I think this is some serious shit right here, boys and girls. It's 5 days in the wild, and there's no way to assess where the heck it's going. But we draw on history, we draw on comparison to get a sense to speculate where it's going. Risky Crypto's in the house, Raul's in the house, Killis is in the house, Andrew, good morning. Chris, Shabby, hey Noah, guys looks damn good. Well, because you know exactly why. We're staring at it on the screen. They're going to do a sex job. Oh my God, I can't believe I said that. I can't stand Solidex. I can't stand it. Now, obviously, I have some capital on here. It's generating significant revenue. I absolutely can't stand this protocol. It drives me nuts. But one thing I'm always good at is peering through the madness. I started my entire stream saying peer through the madness, and that's what I do. So the branding is just uh, ridiculous. Like I have no interest in. I played with solid sex. Oh my god! Every time I say it, I hate it more and more. And all I know is, in the end, it's going to suck solid out of the market. Solid sex is going to suck solid out of the market. I've never said a more disturbing sentence in my life. But it is what it is. So I'm partaking in these incentivized positions, which is aggregating solid emissions and providing additional sex incentives. And that's okay. I'm capitalizing on the situation and I'm peering through the madness. Now, I'm so curious when 0xDAO and VDAO and the other ones is, launch because I think they're just going to create additional circulating supply disruption for Solid. In fact, all morning I'm watching the Solid price and I'm like, yeah, I'm going to get another chunk. And I already have a large chunk. And I think I'm just going to get another chunk. I'll make a buy. I'll get it up to like $8 in one buy. Drop 100 grand on that bad boy. Fenor, do you have any thoughts? Heard of Celestia chain? Sure. There's so many chains. We're having chain explosion. It's chain explosion right about now. Since Frax is buying up as much CVX as it can to control as much curve, wouldn't that mean that it would be more prudent to hold CVX than FXS? Yeah, but it's not just about the curve narrative. That's why it's a much more evolved ecosystem. So the curve narrative is you want ownership of curve to control emissions, but that turned to be dominated by CVX. So you want to own convex so you could control curve emissions, and now it's Frax that has a commandeering control over convex from a Dow standpoint, and that's if you're just focusing on the curve narrative. Frax is a stablecoin unto itself, so it's an entire ecosystem unto itself. That's the bottom line. So my 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 willingness to deploy capital excessively to the curve narrative is because the two assets that are exposed to the curve narrative aren't just revolving around the curve narrative. They are more multifaceted. Um, Killis, I know you don't have a crystal ball, but your opinion is appreciated. Do you ever see Blizzard guys recovering in the future, 3-5 years? I have no idea. Unfortunately, I have no idea. I know that they need to control their inflation and they need to control it with deflationary pressures, and that's exactly why the Geist price ripped up when they offered sex because they offered sex when they offered the sex airdrop. That's because of incentive systems. Incentives drive capital in. Now the complexity is incentive systems tend to get overwhelmed and they need more recursive feedback in order to continually drive capital in. So they need to start throwing up some damn bribes on Solidly. They need to start probably throwing up bribes on SolidX and the other DAOs, and they need to get more incentives to encourage capital to flow into their market to purchase their currency. And it could work, but they have a burden because of their emission schedule. They could do it. We've seen that hyperinflationary emissions can have balanced deflationary pressures, making for a stable market. Pretty interesting. I have no idea over 3 to 5 years. Big speculation, long time horizon, very volatile asset. Excuse me. Larry M., my main man Noah, happy to tune into the stream. Thank you for your assistance figuring out these markets. It's a pleasure. And they sure as hell are complicated markets. Alt base app to the moon? To the moon, yay, yay. Chris, war, inflation, sanctions, market uncertainty, but Bitcoin's still strong. Do you see the BTC is risk off narrative taking hold? Do you think this is a blip? I don't know, and I don't go as far as saying that it's not a risk asset. Clearly, it's volatile, and volatility is inherently risk. I don't know how to entirely define Bitcoin. I tend to agree with Michael Saylor over a 100-year time horizon. Over a short time horizon, I don't really know directionality. I know the entire market, everything is completely sensitive to a risk-off event or plumbing, breaking, or the Fed screwing up their monetary policy, which they're probably going to do. So, and oil at whatever the hell it's at right now. Oh my God. So there's risks all over the place, and that's Stephen Van Meter territory, and I love his ideas and the way he thinks, because anyone who's like, oh my God, it's not going to, no, that's the whole point. That's the whole point of his commentary. Yeah, these are the ways it would happen. These are the conditions in which shit's going to blow up. Okay, great. It's not blowing up, which means you play a market. You always play a market the way it is, but it doesn't mean you don't contemplating shit blowing up. And that's how you manage a portfolio. You have a portion of the portfolio that's protective. Historically, it was 60-40, 60% risk assets, 40% bonds, or vice versa, depending on conditions. And that's managing risk. Position size. That's how you play this game and win over time. Risky crypto. How does one get exposed to the curve narrative without dealing with Ethereum fees? I mean, you can have curve on other chains, but you're not really you need convex. So convex gets the bribes, and the bribes are there because of the curve emissions, or CVXCRV, which is only on Ethereum. So you're not really going to get exposure to the curve narrative the way you want, other than on the Ethereum mainnet. That's just the way it is. Liv W. Hi, no, I'm curious if you have any adjusted report again with the recent market moves. I'm about 22% stables at the moment. So yeah, I've deployed capital in the last week as a result of what I'm seeing on the screen at the moment. This is my sentiment. When I see this, I've seen this before. I've seen this story before. That's what's so fascinating. But the story is playing out different, and That's what piqued my interest. Enough so to convince me to deploy capital in a very risky market. Why was Fantom specifically chosen for solidly, and will this permeate to other chains soon? Likely not soon. This is a complicated system that requires federation and coordination and deployment stuff, so on and so forth. It's very complicated stuff. Fantom is cheap, and if anyone's having problems with Fantom, there's literally no problems with the network. Don't forget to jack up your gas prices. Jack it up to 2,000. Listen, if you're talking about $2, $3 transactions on Fantom and you're comparing them to $50, $100 transactions on Ethereum mainnet, I don't hesitate. You play the market. If you want to use the system, it's a couple bucks for a transaction. Most transactions would be less than a couple bucks. Most transactions on Fantom are like 50 cents a dollar, give or take. I want to bridge my multi from Ethereum to Fantom. Do I need USDC to do it? What protocol offers solid for multi LP? It's a lot of questions. You go over to multi swap. You can bridge whatever the heck you want. Bridging stablecoins usually has the best liquidity, and bridging USDC from mainnet has unlimited supply. I believe it's a mint operation. Should be a bridge. Let's take a peek. No, but they have $27 million worth of liquidity that you could transfer over. If you want to use MIM's a great way to transfer capital from Ethereum mainnet to any chain because it uses the router function where all the collateral exists on Ethereum mainnet and it's minted in tokenized representation form on the counterparty chain. So this is basically why Daniel has always said this is the premier cross-chain asset. Then you're not going to, Frax isn't the most suitable, doesn't have the best depth of liquidity. But Maya is another asset I've talked about recently, particularly I'll highlight in brevity. It has unlimited liquidity on Fantom, so it's a router asset. And it's a Polygon native, so there's liquidity there. But what caught my eye with the protocol is obviously Celsius X integration and just the sheer number of protocols it's deployed on, which is far superior than any other stablecoin. It is the leading cross-chain stablecoin, which has no presence on Ethereum mainnet, which is quite fascinating. LiveW Metis is having its solidly. I heard about that solidly fork, so we'll see what it does. I don't need to own everything, and I'm happy for them. I'm happy for anyone that's able to capitalize on the situation. Andrew, at this point in time, what is the optimal strategy for taking advantage of the curve narrative? You need a large position, which is a burden because I don't think you're going to get multiples. I don't think you're going to get a 10x out of curve in a short period of time. So it's kind of like a Bitcoin situation. Unless you have a big risk off event that takes us down to like 20 grand, I don't think you're going to get that 10x. I think it goes to like 400, 200, 400 in the year or whenever. But that'd be a 10x at 400. It'd be a 5x at 200. So you're not getting the multiples. You're not going to turn $1,000 into $500,000 with any of this stuff. You're not going to turn $1,000 to anything significant. Really hitting the curve narrative, other than possibly with like a. Well, you're not really going to even do it with FXS and Frax. It's just these are large macro cap assets. It's not easy to start. It's not easy. I don't want to focus and digress too much on how to deploy smaller portfolios, but it's not easy to start, and it tends to be much more risk on deploying larger percentages of the portfolio and trying to capitalize with cap gains. Buy low, sell high, try and catch 10x's and 100x's, and you're able to get those multiples out the door. Topic for another day. How do you vote on solidly after creating an LP position? You go to the vote page and you vote. You drag the little slider and then you press the cast votes button at the bottom. Harshal, people are selling NFTs on paint swaps. Are you buying the NFT? No, I made my NFTs. I was one of the early ones, I guess. I created 4 NFTs. One was 10,000 is my most recent one, but I created 2,800. Now, I wish I got in a little earlier. I don't know if the lower number really means anything, and it's probably epoch-wise. when the next votes are calculated, maybe Thursday, I've heard. Um, that might be like the threshold. But I always say never early, never late. So I hesitated to the start. I took my time. And obviously, my narrative is much more rich as compared to last week, now that Solidly has been released. I was speculating for a while on V33 tokenomics. I always had interest, but I had to wait. And you really should wait a little bit until you do your due diligence. And I mean, $2.258 billion. That's crazy. That's that changes everything. This defines the entire Fantom ecosystem because it's just starting. If Solidly rips to the upside and bribes start going to 10, 15, $20 million a week, everything's really going to change even further. Hi Noah, smash the likes here for the knowledge. 61 people in the stream, 27 likes. We can do better. Yo, ciao, Cappy. Oh, yeah. Paul, any news on what's happening with Danny and Abracadabra? Is there redemption arc in the cards? Unknown. Abracadabra, I still have my position. I'm content with my position size. How do you manage risk? Position size. Merlin and Squirrel are working on Abracadabra, and they've always been extremely competent, and their software is spectacular and overwhelmingly functional. I like it. All the complexity with Wonderland and Danny is mutually exclusive. Uh, Crypto space has a memory of a goldfish. Check back next year, and no one will even know of that story. Um, One curious view, sex drop. I can't even talk about Solidex. I like the blue monkey. I like the imagery, but the branding, this meme shit, it drives me nuts. I like this. It's cute. But man, I don't know. If they just dropped the sexual overtone, I think it would have done much better. Um, Went solidly on AVAX or something similar? I do not know, my friend. Live W, the UX on SolidX is so bad. The funny thing is, I literally just said the opposite. I like I like PFPs. I have plenty of NFTs, so I think they're cute. Now, does that have a place in a protocol that's managing $2.256 billion worth of liquidity? I don't know. I like the color scheme. It's appealing. I don't know if it's appropriate for such a large amount of capital under management. So you make good points, and this is not easy to get right. And I sure as hell don't appreciate the sexual branding. Um, the UX, wow, Paul, yep. Harshal, are you just accumulating solid or locking VE NFTs somewhere? I have 4 VE NFTs, so that's the way I've decided to play this, and I have some liquidity that I'm deploying on Solidex. Uh, Iron Bank, you can see the charts. The Iron Bank looks great and Beats looks great. Yeah, there's 961% incentives on Iron Bank. Of course, it's going to be an appreciating asset. And the same with Beats, 553%. So this thing is printing nicely, about 4 grand a day, give or take. What's your thoughts on getting into solid sex, wrap token versus locked on? So I think my sentiment is red herrings. This is not Curve, where you need to own a derivative asset that accumulates it in multiples. Like convex is representative of multiple Curve, and that would be like sex. Oh my god. But so the point being, solid sex does not get exposed to the rebases. Um, but VENFTs, your locked solid positions, these are exposed to the rebases. So my expectation is VENFT is going to go multiples as the voting epochs pass. And so these are non-dilutable positions. Um, so I don't think I don't I don't think the entire curve narrative applies here. We didn't need a convex. We didn't need Solidex because curve solidly has convex reflexivity built in. And that is what I'm going to stand by. That's my opinion. What do you thought? Hell, CO Nation different than VE curve, which you cannot sell as an NFT. Yeah, but it's more than just not being able to sell VE curve as an NFT. VE curve is diluted. aggressively diluted. VENFTs are not diluted at all. And that was by design in V33 tokenomics. One curious view. Oh my God. Don't ban my damn video, YouTube. I'm just talking about crypto protocols here. Risky crypto, sex incentives. You can't make this shit up. You really can't. Raul, what are you going to do with your solid stack? Locking in the most suitable protocol out of the 4 to 5 that will be? No, I just put it right on solidly. It's fun to watch him cringe. Thanks, Thoyo. Cheesy peasy. I'm not able to make solidly work for me. Any tips? No, because I don't know what's not working. Generally speaking, you get some RPC errors at times. Let's see if it happens. Yeah, you see the RPC errors, just press refresh. It'll work. I'm not able. Pat Mac, nice. You get a shout out from Jack Newald on Twitter. Oh, I got to check it out. I like Jack. Jack's got a good head on his shoulders. He's really smart. Um, Grid Rain. Geist now is a solid X locking fee function managed. Geist, scroll down. Geist is a nice bump from its introduction. Yes, indeed. It's off my radar. I like Iron Bank because it has the potentially big scale and scope. And I've honed in on Beats because it has bribe function and it has its own gauges and its own emissions. So it literally is a solidly in many regards unto itself. It's a curve narrative. The bribes are probably the biggest thing in this entire experimentation in the crypto space. They drive capital flow. They drive stickiness. They drive capital inflow, which creates deflationary pressures on the LP position currencies. It's a big deal. So Beethoven's a big deal. So I like these two assets. Who are you voting for your bribes? The only one currently that has anything is Tomb. So I have my votes allocated to Tomb. Kill this law. Just try calling it X now. I can't get over it. I can't stand that branding. It drives me nuts. Kingsley moved away from Sin USDC position, ready for the Weave USDC LP starting midnight. Yeah, that whole WEVE thing is something that I consider a massive red herring. You have all the general public that's plowing capital in there, and I'm like, guys, you're going to get hammered. And maybe you won't, but look, anyone who bought here at 20 cents could easily have sold for a 20% haircut. This chart looks like shit. I wouldn't buy this at all. I have no interest in this asset, and a good part of that is because so many people are FOMOing in, and you see that in the price point. I don't want this asset, but what do I see? I see people buying this shit because of this, and they don't. The reason they're buying this is because they don't understand this. So this is my buy. This is what catches my eye. The shit that no one's looking at. I have no interest in something that's gone up this high. I have no interest in something that everyone else is looking at. That's the last thing I would be interested in. Let's wrap it up. Wednesday, March 2nd at 12:37 p.m. As always, I thank you all for joining me. Please tell everyone to subscribe. After party on Discord, because that's where the best rational minds are in the crypto space. Don't forget about noahseidman.com. If anyone wants to talk, I'm more than happy to provide one-on-one consulting services and help you out in any way that you think you need some help, especially understanding these crazy crypto markets. Happy to talk about your portfolio construction, how much risk are you exposed to, are your position sizes off, so on and so forth. So bottom line is we all can do better, and I'm more than happy to help you try and do better. I wish you all a wonderful day. I will see you again next time. Peace.